Hello there, friends. Frank Zorrilla, Zor Capital. Happy Friday, 12th of January. Happy New Year as well. We're going to do what we do on a weekly basis, a little weekly recap of what it is that we did, what we're looking at to see if we can learn some things, unlearn some things, and also I'm going to answer some questions that I got from our social media friends. So again, just a brief introduction. I've been in the business for 20 years, 1998. Started as a young puppy. I manage money through separate accounts, through interactive brokers. I run a hybrid approach. I believe that you should have some passive ETFs in your portfolio, SPY, Qs, IWM. And I also, with that, I commingle that very simply with some swing trading strategies that what we're looking for is to take those strategies and help us outperform if possible. Okay, so I'm not a believer that you should be swing trading your entire account. It should be a small piece of your overall portfolio. So here's my main screen. Okay, maybe you notice, maybe you don't, but I don't have the SPY or the indices on my screen. I don't know what the market is doing throughout the day unless I get these CNBC alerts on my phone every 2 seconds. And I don't believe it's important as a swing trader to have them on your main screen. The most important thing that I have on my screen is my rolling 5-day watch list, which is right over here. 1, 4, 1, 5, 1, 8, 1, 9, 1, 10, 1, 11. And today, this tells me more about what's going on with the market than the S&P or the Dow does, okay? So we're going to go right off the bat. What I'm looking for is, in these swing trades, I'm looking for stocks that have some type of momentum for the most part. I'm looking for tightness because typically contraction leads to expansion with stocks that have high momentum. That's number one. Number two, I'm a firm believer that in the short term, what matters the most is momentum and mean reversion. Doesn't matter what the stock does, how much money they're earning. What matters is momentum and mean reversion. What we're looking to do is take advantage of the market structure. Stocks, if you go through charts, stocks have a tendency to go up for 3 to 4 or 5 days and then stall out. Also, they're down multiple days in a row. They have a tendency to actually move up in price and have some type of dead cat bounce. So that's what we look for, to take advantage of the market structure. So here is my 1-4 list pod. Here's a stock that we had flagged right over here somewhere. 1-4 going through this high, which is roughly 69.60. And I'm going to answer the first question. One of the questions I got from social media is, how do I deal with volatile opens, fast open drives, gaps above entry, big spreads, etc.? 9 out of 10 times, how do I deal with it? I just let them go. This stock gapped open, big gap opening, and just that's it. There's nothing you can do. So it gapped open. I missed the bus. I'm waiting for the next bus. And the same thing happened today with Twitter, where it was on the list going through roughly 24.37, and it gapped open, big gap. There's nothing to do there. Not for me anyways. I just missed the bus and let it go. As far as volatile opens, big spreads, the same exact thing. And this happened this week with OLED. When we had OLED on 1.8, where the buy point was 180.175 here on 1.8, and the stock had a huge spread right at the open, $1.50, $2, and I just let it go. I'm a little anal with these things, so if I miss the first bus, I just go on to the next one. But you can do certain things. I mean, obviously in hindsight, I wish I would have bought some, even if it was up $3 or $4, because I would have been up roughly almost 15. But 9 out of 10 times, I let these things go. But something that you can do is, or I can do as well, is if it gaps up, all right? If my buy point is 181.75 and it's trading at 184.75, up $3, maybe I can buy just a little. If I had to buy 1,000 shares based on my purchase price and stop, and my and the amount that I had to buy was 1,000, maybe I only buy 500 or 600. That's a way around it. But 9 out of 10 times, I'm letting these things go. Okay. SFIX, Here's what I'm talking about, market structure. Stock goes up 1, 2, 3, 4 days in a row. It tends to move sideways. The same thing here, 1, 2, 3, then it goes down. Here's the opposite, down 1, 2, 3, 4, 5 days in a row. We had this thing going through 25.23. 24.93. Buy stop 25.03. Got hit at 25.23. 20 cents above the buy stop. It went up a little bit, roughly almost at $27. We took some off here on the way up, and then we sold the rest right over here, a little bit above break even. Here's another question. I use buy stop orders, all right? I'm watching during the morning, so I'm always using buy stop orders, because I believe that limit orders limit your business. And a lot of times when you put a buy stop limit, the stock will go right through that buy stop, and you'll get 0 shares for the most part. Almost every single time you won't get anything. The only time I'm putting a buy stop limit order is if for some reason I'm not going to watch the open, and for some reason I'm not going to be around from 9:30 to 10 o'clock in the morning. So I'll put some buy stop limit orders, and I'll put a start time of roughly 9:45, where the orders will only get active after 9:45. So I'll put a buy stop limit order, so that way if something gaps up $5, my stop that becomes a market order doesn't get executed $5 above my buy stop price. The limit will take that risk away. But that's the only time that I'm putting buy stop limits. ZGNX, this was on the list a couple of times. It did not trigger, but we had it on the list on 111 here, going through roughly 34.90, buy stop 35, got executed at 35.20, sold some today up 2, and missed up 3 by roughly 20 cents. So that's that one. DF did not trigger. SSC, something, long at 423, took some off 20% plus. RDFN. Here's another question that I got on Twitter, which is, what's my criteria for adding to a position? Normally, if it's a straight swing idea, okay, I don't add. I'm buying whatever I need to buy once it triggers. This swing here, which comes from the scan down multiple days in a row, here 1, 2, 3, down 3 days in a row to this lateral potential support, and also the yellow line, the 20-day moving average. What I might do is I might nibble on the way down, a very small amount. And then once we get the green day, then I'm adding a little bit more. Once we go through the high of that green day, I'm buying the stock now as it's moving higher, then I'm adding even more. That's typically the only time that I add, is when I'm working with this scan here. Let me give you a better example. Google, here down 1, 2, 3, 4, 5, 6, 7, 8 days in a row. What I did here was very simply, I nibbled at 10.55, okay? Now, if I wanted to take more advantage, what I should have done was put a buy stop here through the high, which was roughly 10.58.05. So here is my little nibble, and then I would have added the full size as it went through the previous day highs. So I'm typically only adding, with these type of setups, stocks that are down multiple days in a row, that I'm doing very small nibbles just to put them on my screen, and then I'm adding as it goes to the previous day highs. And if I have a story stock, something that I believe in based on numbers or some types of story behind it, then I also add on the way down typically, and sometimes on the way up. So RDFN is something that we picked up here. Moved higher immediately, then it sold off. It got stopped out at a loss as it broke this low here, 26.67. GCAP, this was a big winner for us. Stock of the week right over here. Took some off, took everything off, bought some back. The stock is acting like a turd, not doing much. MGTI, here was a setup on 1.4 going through here 475. It got through that high, no follow through, stopped out as it broke right over here, $4.25. So when I'm taking stops, here's another question. which is how do I take stops or how do I sell? The stops, I'm taking stops immediately. I normally don't fool around with stops. So when I'm doing my orders in the morning, based on the difference between my purchase price and my stop price, that's how I know how many shares I'm going to buy. Also, depending on how much I'm willing to risk, 1/4% of the account, half a percent or 1%. So I already know where my stop is. It's already predetermined. So I don't have an issue taking the stops. So that goes without saying. That I'm going to put, once the stop is in, I'm selling, and I have no issues buying back the stock if need be, if for some reason it moves, it sets up again and then moves up. Weight Watchers, here's another stock that gapped up. We had it going through here, 46.94. It gapped up and just had to let it go. Just too bad. It had a great weekly chart as well. PODD we spoke about. SRAX, decent chart. We had it going through here, through this high. We got long at 550, sold some up 25%. Sold the rest at break even. There was no follow through whatsoever. I sold the rest at break even. And today, intraday, the stock was forming a very nice inside day on very small volume. I nibbled a little bit and then bought the rest going through the intraday high with a cost of 598, went to 620. But it closed like most stocks, had a little end of day sell off. Cub, good weekly chart, sideways for 6.9 years. I did not take the trade because of volume, but it did okay. FANG, here's a stock. We got long on 1.5. Here going through this inside day at 695, almost went up to 750. No follow through whatsoever. There's been a little call action, so it still looks okay. This still looks okay. DF, we spoke about already. SIEB, another Bitcoin play. Got long at 15.99, a very small amount because this stock is it's not that liquid. Big spreads. We sold some here, up 10%, very little. Still holding on to the rest, almost close to being stopped out. MGTI we spoke about. Grow, it's a Bitcoin play. This is a big winner for the for the subscribers of Stock of the Week Research, which is free. Subscribe to it. Riot did not trigger. DPW, we had it on the list on this day, just did not trigger. Weight Watchers we spoke about. OLED we spoke about. SSC we spoke about. Cub, we did that. COHR, good looking chart. Stock printed inside day here. We got long at 296.17. Bought a little bit more at 297. A little bit more at 298.66. Course of 297.32. MAs are hugging. The 10, 20, and 50-day moving averages are hugging. They're just very close together. All that means, very simply, the stock hasn't done much over the last 50 days. And when you have these MAs hugging, like the way it's hugging for this stock, you typically get a nice trend. You get a nice push higher, okay? There's a lot of compression going on, a lot of contraction, and again, contraction typically leads to expansion. JSO, we got long here going through this high, 755, stopped out today at 735 as it went through the breakout day low. OTEX, here's another stock where, from the scan down multiple days in a row, nibbled here and bought more on the green day, okay? Because again, I think it's okay to buy on the way down, but for me, I feel a lot more comfortable buying when this pattern, when it goes from red to green. I feel a lot more comfortable buying it on the way up than just buying everything on the way down. CDNA, this stock is probably going to be on my restricted list. It triggered here on this day at 750. A nice move, but it sold off, stopped out roughly on 690, 683. ENPH did not trigger. Weight Watchers we spoke about. MFIN was a huge winner. This is the picture perfect swing chart, okay? And it did it twice. I have a whole library of charts of these type of charts where they set up like this, where you have the first initial move, which you're never going to get. You're never going to catch this move unless for some reason you know the story and you've been owning the stock for a long time. If you don't catch this initial move, which was roughly a 30% move, it's irrelevant. The stock goes sideways for 25 days, and notice how as it's going sideways, it starts to tighten up. And this is when you want to start looking at the stock and start putting buy stop orders above the market price. Then it has a second leg higher, big move, roughly 44%. If you missed it, no big deal. It starts to go sideways again. Now look at these candles. These are loose candles. But look how it starts to tighten up at the very end. Inside day, almost an inside day. We got long going through here, 395, and the stock just took off and volume came in. So here's another question that I get. How do I sell? What's my target? My target going into every single trade is always up. I don't have initial targets. Well, if it gets to 570, I'm going to sell some based on the chart. No, my target is up. That's number one. Number two, the question says, how do you recommend scaling out of winners? Do you wait to get 2 to 1 on your original stop before taking off your first partial? Example, if you had $1 risk, do you wait until you get to $2 before taking some off? That's a good idea. But the issue that I have with this whole thing about I'm not going to take a trade unless it's got a 2 to 1 risk reward ratio. Okay, that reward is just up in the air. You don't know if you're going to get that 2 to 1. You have no idea. You might get it, you might not get it. So this whole I'm only going to take trades if it's a 2 to 1 or 3 to 1, we have no idea what you're going to get. Okay, I believe in selling on the way up. A stock like MFIN, it's a low price stock, very low flow. I'm going to go out there. I'm going to sell some up 10%. Let's say, for example, if I bought 1,000 shares, I'm going to sell 100 up 10% at 440, 450, whatever it is. I'm going to sell 150 up 15%. I'm going to sell 300 shares at up 20%. And as the stock starts to move higher and higher, then the size of my sales are going to be bigger. Okay, and again, and you're going to miss out, and hopefully your first sale might be your worst sale, but I'm a big believer that you need to sell on the way up. And if you read books like, for example, like IBD, they've done studies where, that stocks tend to stall out when they get to that 20% level. However, if you get 20% very quickly, you hold on to it for 8 weeks. But the problem is that the market changes, okay? Before you used to get, these were the typical breakouts a long time ago where they broke out, they went up for 3 to 5 days nonstop. It doesn't work that way anymore, so you need to change that strategy. And as a matter of fact, for those of you guys who follow IBD, just a few years ago, they came out with their swing strategy that's looking for shorter returns based on swing trades because they were no longer getting that 21% return that they were used to. Okay, so the target is always up. I don't believe in this whole thing, the 2 to 1 ratio, because you have no idea whether you're going to get that reward. Number one. Number two, I'm a firm believer that stocks move in momentum bursts that might last 4 to 5 days. So if a stock is up 5 days in a row and it's only up 5%, then more than likely I'm taking it off, regardless of whether or not it gave me that 2 to 1 ratio. So I'm more of a believer of market structure than, saying that I need a 2 to 1 based on, hope. Okay, so MFIN, this is a great scan. How do you find MFIN? Very simply, if you have TC2000, you rank the stocks based on best performance in the last 6 months or some type of momentum ranking, and you'll find these stocks pretty much at the near top. And again, what you want to do is you want to wait for tightness. Expansion, it's typically followed by contraction, and then they expand again, typically to the upside. JSO, we spoke about RDFN, we spoke about QD. We had it here a few days, it just didn't trigger. ERY, this is a trade that I did. bought at 789, sold at 760 or 750, which just didn't work out. EMPH never triggered. DRIP the same as ERY. CDNA we spoke about. Run, run long at 617 through this high. Nice little follow through, not bad. Volume came in, still looks okay. I'm looking to sell this on the way up. Target is always up. The stop loss is already known. We know what the stop loss is. You can't change that. CPRX, we got long here at 401 going through this high. Has somewhat of a move. I sold it today just because it went through this little low here. And again, when the market right now is running, really hot, and when the market is running the way it's running right now, I have a little bit less patience. Just because, at some point, that rug is going to be pulled, at least for one day. OLED, we spoke about OATX, we spoke about DRNA, did not trigger, actually did trigger today. Going through this high here today, so that means I'm long this stock. Still looks okay. Stop goes right over here at 810. WPRT triggered today right at the open, sold off almost at a stop. EMPH we spoke about. Roku did not trigger today. OSTK, no, don't know why that's on the list. ZGNX we spoke about. Run we spoke about. ADMS here prints an inside day through the high. Nice little candle. Little follow through today, but still looks okay. The stock is heavily shorted and it's owned by a lot of hedge funds, smart guys too. AGN bought the stock at 175.29, printed an inside day through the high. The stock was up $5 this morning from this buy point, sold off. Here's what I'm looking at. This thing might have more room to go. This white line is a 10-day moving average. Yellow line is a 20-day moving average. Resistance for roughly 6 months. I mean, there was a big seller here. Every time you got to these averages, they just sold it off. But now recently, they're starting to curl higher along with the 50-day moving average. And if you look over here, they're starting to act as support. This is a possible character change where the sellers more than likely are out of the way or buyers are starting to step in a little bit. So I like this stock, for higher prices. I'm going to sell on the way up. I had a 5-point profit. I didn't take any off, but the stop goes here on 168. We spoke about this. JRJC, here's another question. What do I do when I own a stock like the JRJC? It goes through the buy stop. We get long at 305 and it kind of like stalls out. It's only been one day and it still looks okay. It's still within the great pattern. The stop goes right over here at 275, 270. There's certain times that I do work with a time stop where if it doesn't work out within 5 days, chances are high that I'm going to let it go. Especially if things are really humming. If things are really, if the trading is going really well and the stock is not performing, I give it less time to perform. I'll go on to something else. But something like this, okay? Trigger. It's only been one day. It's not doing much. If we get to the 4th, 5th day and it still hasn't done much, you could do a couple of things. You can sell it immediately, sell everything. All right, but you might ask yourself, it's done nothing wrong. It's still above the stop. So should I hold it? Another suggestion would be that maybe you sell half on discretion. You take half off and then the other half you leave it until you get stopped out. And that's a win-win situation because there's a lot of times that I've taken things off because they stop moving and then the next thing you know, they're up $4 or $5. A perfect example was MYOK. Okay, long right over here at 38.90. Nice move higher, took some off, goes sideways. I take it off and then it just takes off again. So that's the question. That's JRJC. FENG we spoke about. ALNY. Trigger. We had this on the list yesterday and also today. Trigger today. Buy stop was roughly 120, 130.01. We got executed. Was up $2 this morning or this afternoon and it sold off. Still looks okay. Stop 126. NETE. Got long the stock yesterday as it went through this inside day. It still looks okay. Still has an opportunity to go. DRNA we spoke about. WPRT we spoke about. We also have MARA. I don't know why it's not on the list. 110. Oh, here it is, Mara, 110. So Mara, here's from that one scan, down multiple days in a row, meaning down 3 days or more. Stock is down 1, 2, 3, 4, 5 days in a row. It prints an inside day on the 5th day. Look at the volume. You can barely see the volume. That's exactly what you want to see. All that means to me under this context, that the inside day, that the preceding move is pretty much over. And then what you want to do is you put a buy stop above the market price, this high, which is roughly 394. It got executed. It went up immediately. Next day it stalled, and today we got lucky and we sold. We got lucky with some new stock. Was at 5.25, 535 pre-market. We sold some at 5.25, 510, 508. I think the bulk of it, all of it, we got out at a 20% profit. So here's a situation where you got a 20% profit. You got to take some off the table. And if you want to leave some on to see if you get, something like this, you can leave it on. But when you take some off, for most people, when you take off that initial profit, for a lot of people, what that does is it gives you the opportunity to ride the stock a little bit more for further gains. Okay, that's all it does. In this case with Mara, sold it, discretionarily only because the stock is a fader. Okay, and the Bitcoin plays have not been acting as well as they were a month ago. So here, today's list, Twitter, we spoke about, just gapped up. COHR, we spoke about, looks good. Kang did not trigger. ALNY trigger, we spoke about. DRNA, this triggered. WPRT trigger, and Roku did not trigger. Let me see if I have any other questions. So again, I'm not a big believer. I like to sell on the way up, and you can always leave a piece for further gains. And then that piece that you leave on, you can use something simple as the 10-day moving average or the 20-day moving average to get out of that piece. As far as only getting into trades that are going to give you 2-to-1 risk-reward ratio, you have no idea what the reward is going to be. Okay. I'd rather go based on market structure. Stock goes up 4 or 5 days in a row. What typically happens, they tend to stall, go sideways to down, and then set up again. I much rather use that than try to use, these set figures based on what I'm risking. Either way, thanks for watching. Trade them well and be well.